Right, thank you. So what I want us to do today, I want us to focus on bank reconciliation statement. Okay, bank reconciliation statement. Yeah, that's all I want us to look at today. So what we need to put in mind is that every business, you as a business, you have got the records of the transactions that involve the cash and the bank. You record those transactions in your cash book. There's what you call your cash book. That's why you record all those transactions. At the same time, there are some of the those transactions, since they involve the bank, they have to correspond with the records that are at the bank. Okay. So what is there is that at the bank, there is a record of the transactions that involve your business, and the record of those transactions is what is known as the bank statement. Okay, in the bank statement, you have the records at the bank of all the transactions that you do, you as a business involving the bank. Then the cash book belongs to the business. So a business has the cash book, then the bank will have the bank statement. So now, what usually happens is that most of the times you find that the records that you have as a business sometimes do not tally, or they are not the same with the records that are recorded at the bank, okay, in the bank statement. So you find that there are those differences. What you have in the bank statement and what is in the cash book does not agree. So when that happens now, you need to do what is called bank reconciliation, trying to update your cash book. That is to make sure that all the records that are in the bank statement, they also appear in your cash book. And the records that are in the cash book, they do appear in the bank statement. That is the whole idea of trying to do what is known as a bank reconciliation statement. So what usually happens is that you have got let me start from what we call the unpresented checks. Unpresented the checks. Yeah, I'm just giving the introduction. So with unpresented checks, what usually happens is that you as a business, you issue a check, you record in your cash book on the credit side that you have given out a check. Okay, when you give out a check, you record on your credit side of the cash book in the bank column that you have given out a check. As you give out a check, you have issued a check. Then you find that you have just written in your book. Then that person whom you have given the check, they will have to take that check to the bank and deposit it so that the bank can get that money which is in your account and put that money into that person's account. So what usually happens is that it takes time for the check to be processed. In those days, it used to take a lot of time. Nowadays, at least, it's a little bit fast, but it's not something that you can just do there and then. It's a process. So you find that as in the process of processing that check, the days usually pass. So the amount of money in your bank as a business, let's say you have 2 million, you will still have 2 million, okay, in the bank. Even if maybe you gave out 1 million, you wrote a check for 1 million, meaning you have given out a 1 million. So it will still be showing 2 million in your bank account until that person takes a check, presents the check. Okay, the person presents the check to the bank, and then they process the check. That's when they get the 1 million from your bank, so that you can remain with 1 million and get this check and debit it to the other person. So now there is that time lag. There is that time lag between the time when you issue the check and the time the check is fully processed. So what usually happens in between, okay, in between, you will find that what you will have as a business in your records, you will issue that we gave out a check. But in the bank statement, that check will not be appearing, okay? In the bank statement or at the bank, that check will not be appearing because they haven't yet processed that check. So those checks that have not yet been presented to the bank, they are called the unpresented checks. Yeah, I'm just introducing you to the language first. So they are called the unpresented checks. Do I have any question about unpresented checks? Any question from anyone? Okay. We're done with unpresented checks. They are recorded in your cash book on the credit side of your cash book, but they are not there in the bank statement, meaning the bank is not yet aware until that check is fully processed. At the same time, there are what we call uncredited the checks. So with uncredited checks, what usually happens is that you as a business, you receive the money, you're receiving the money, okay? You're receiving the money. You record that you have received maybe a check today. You received a check, then you record in your cash book that we have received a check on your debit side, okay? But in your cash book, it will be showing that you have received maybe 1 million. 1 million patch. But what will happen is that when you go in your bank account, that 1 million will not be appearing until you get that check. You take it to the bank. And then when you take it to the bank will have to get that money, the money from that person's account into your bank account. So before your account receives the money, what will happen is that your amount will still be showing that same original amount. Your amount will not increase. You indicate, of course, you indicate in your cash book that I have received the money. But when you go in the bank account, you find that that money is not yet appearing because you have just received a check. Maybe you haven't presented that check as a business, or that check has not yet been processed. So when that check is processed, it means the bank will have to credit those accounts, the accounts for those people. They'll have to credit those accounts so that they can debit your bank account. So the uncredited checks, it simply means those accounts for the other people, okay, the other guys, your customers, have not been credited. When they are credited, it means you are receiving, you are receiving, the double entry system that we talked about. When they are credited, it means you are being debited. So you indicate that you have been debited with a check. That's what we said when you're recording the cash book. You record that I've received a check, but the bank has not yet credited those accounts. So there are those problems that you usually have. What you have in the cash book is not agreeing with what is recorded at the bank. So in your bank statement, in your cash book, it will be appearing that you have received that money, but in the bank statement, that amount will not appear. Okay, that check will not appear because the bank has not yet processed or has not yet credited those accounts. Those checks, we call them the uncredited checks. Are we fine with uncredited checks? We'll do the examples, don't worry. I'm just introducing to the language first. Are we fine with uncredited checks? Any question? But am I clear? I might be talking.
Yes, you are. No.
Yes, you are, sir.
You're clear.
Okay.
Yeah.
Okay, thank you. Okay, thank you. We're done with uncredited checks. You should pay attention to this. You have a question in your exam from our bank reconciliation statements. So just pay attention to what we are talking about.
Sure, sir.
Then from here, I've talked about unpresented checks and uncredited checks. There are also what we call the bank charges. The bank charges. Now, with the bank charges, anyone to tell us what bank charges are in our own language or our own understanding? Anyone who understands what bank charges are? Anyone?
So bank charges.
Okay, maybe these are the charges.
You can continue, madam. Yeah, then you come in later.
Okay, bank charges, in my own understanding, are these charges which we give to the bank for them to provide a service to a customer.
Okay.
For example, yeah, if I have a 1 million in the bank, yeah, so they'll definitely be charging me for me to keep that money in the bank. It's not for free. There are those charges which are usually debited. Even as we withdraw some monies, we have to pay for a service charge as we withdraw on the ATM and so forth. My submission.
All right, thank you. Any other? I heard him. You wanted to say something? You can proceed.
Okay, so just to add on, the other charges that the bank charges us are if you use the checkbook. So if you want a checkbook, the bank also will make sure that they will charge you, also including the withdrawals and the withdraw through the counter. Those are the charges the bank will charge us.
Okay, thank you very much. So we understand what bank charges are. So what happens is that who is aware? It is only the bank before you see the bank statement as a business, you might not be aware of these charges. Okay, you'll be just finding the amount maybe has decreased in your account. You're not seeing where the money is going properly until you see the bank statement as a business. So you find that these bank charges are recorded in the bank statement. They are there. Then they are not there in the cash book because you as a business, you have not recorded them. You don't know them. As you receive the bank statement from the bank, then you update your cash book. That's when you include these bank charges to show that, oh, they are the bank charges. There are these charges that went. Is that clear?
Yes, sir, it is clear. Thank you.
Okay, the other thing that I need to explain before we can zero in two questions is the issue of what we call a direct debit. A direct debit. A direct debit. Anybody to explain what direct debit was? Anyone can explain what direct debit is?
Hello?
Yes, sir.
I think I could just say these are like agreements that are made between maybe a customer with the bank, such as a stop order where you're supposed to instruct the bank to be cutting a certain amount from your account to pay maybe bills or anything that you don't want to have anything to do with, so that the bank will be doing it on your behalf.
All right. Any other?
I think simply is it a transaction from you instructing the bank what they should do, maybe.
Okay. What is the difference between a direct debit and a standing
Maybe,
order?
yeah,
How different are they? A standing order and a direct debit? Anyone?
are they not the same?
Hello.
We are here, you are clear, sir.
I'm asking for the solution. What is the difference between direct debit and the standing order? Okay, all right. So with a standing order, you instruct the bank. You give an order to the bank. Please, can you be withdrawing it? Can you be getting this money and be debiting these accounts automatically to the bank? When it comes at, for example, maybe it could be maybe electricity, paying maybe to, it could be maybe to NAPSA or anywhere. You just tell them that, please be doing this for me to pay some bills for you at some given time. So it's a standing order. The bank is ordered to do that. So it will be doing that. So what will usually happen is that those records, you as a business, you might not have. Like you might not know where the money went, because remember in the cash book, we just record the transaction that involve cash and the check. Like, so you don't know this. These are happening at the bank. Yeah, as a business, you don't record, your accountants don't record these. So what will happen is that, yeah, whenever the time comes when you're supposed to pay that bill, the bank will automatically pay for you. We'll not really paying for you. We'll get the money from your account and pay. Yeah. Then direct debit. With the direct debit, this is when, for example, you have some credit. You have a debt from someone. Okay. Then those people you owe, they go to the bank and tell the bank that, please be getting the money from this person's account into my account. Yeah, that's a direct debit. So it is not you as the owner of the account who is ordering the bank. It's the person you owe, or yeah, the people you owe are the ones ordering the bank. And then you authorize that is happening. Then a standing order, you tell them, you tell the bank, please, can you do this? Did you get that?
Okay, just there, sir. Yes, it's clear, sir. Yeah, the difference is very clear. Now, I wanted to know, someone, say a creditor, has a right to go to the bank without your knowledge, to just go and to instruct the bank to get money on behalf of probably a customer like me. Someone, a creditor, goes and says, not be deducting so much from Mrs. Simwanza, or they should agree first. The three, the bank, the data, and that same client.
Okay, thank you very much.
How is that done?
Before I attempt the question, anyone who wants to attempt the question, how is it done? Anyone?
Hello.
Yes, sir.
I think from what you've explained, I think they do inform you. From what I've seen, they will actually inform you.
Yes.
Like these small, like even the lending institutions, like the small ones, they will actually inform you to say, we are going to do this if you don't pay us.
Yeah.
And if you continue not responding, then they'll just go ahead because you signed somewhere. But they will actually inform you.
Okay. Thank you very much. So what happens, yeah, the example of these lending institutions, sometimes there are those papers that you sign where you even give your bank details. You give your details, everything, including your bank details. So the idea of getting all those things, including the bank details, is that so that when you fail to pay, they can even go direct and just to tell you that we are going to do this. And then your duty is just to authorize. You can't, you have to give authority. Yeah, that's when the bank will honor that, because they have to protect you as a customer. Yeah, so when it is pushed by the customer, by the person, or when it is the one who is pushing that, then that is a direct debit. But if it is you say going direct, please do this, then it's a different story. Did you get that now?
Okay, yes, maybe a direct debit would be, an example would be, since you are the one who's instructing the bank, an example would be maybe the advances that we get. Because those are coming from a person who you have maybe signed to get that advance straight to the bank. And while standing orders is also, standing order, sorry, is an advance, while the direct debit includes the third parties, which are the lending institutions, because I thought it was on a personal basis. I never thought of these other institutions like lending institutions, the microfinancing companies. So I think it's very clear, sir. I've made a distinction there between the two.
Here's the model that I'm now giving you. Here's the model. So the first step when you're drawing a bank reconciliation statement is to update the cash book. Is to update the cash book. So here's the model that I'm doing for you. I'm showing you. Hello.
Yes, sir. Can you get me?
Yes, madam.
I wanted to find out the difference between direct credit and the difference between the direct credit and direct debit.
Direct credit and direct debit.
Yes.
Okay, there is a question. What is the difference between direct credit and direct debit?
A direct debit is an electronic withdrawal from a customer's account, while it's a direct credit is an electronic deposit into an account. So direct debit, electronic withdrawal from a customer's account, while it's a direct credit is an electronic deposit into an account. The other one is withdraw, while the other one is deposit. The direct debit is a withdrawal, while the direct credit is a deposit into an account, something like that.
Okay. Any other, or we are all covered, or is the questionnaire fine?
No, I'm okay, sir.
All right. Here's the model that I'm giving you now. Here's the model. It's just a model on how to update the cash book. See, you have received your bank statement. Okay, the bank statement. Now that you have received your bank statement, this is what you have to get. The direct debit, the direct debit, sorry, the debit side of the cash book, it is equal to the credit side of the bank statement. It should be equal. So that is to say, the records that you have on the debit side of your cash book, they have to agree with the records that are on the credit side of the bank statement. Similarly, the records that you have on the credit side of the cash book, they have to agree with the records that you have on the debit side of the what? Of the cash, of the bank statement. Did you get that?
No, come again, sir.
All right. I am saying what will happen is your cash book has got the debit side and the credit side. Even the bank statement has the debit side and the credit side. Now, what is written on the debit side of the cash book has to tally, has to be the same or agree with what is on the credit side of the bank statement. Similarly, what is on the credit side of the cash book has to tally with what is on the debit side of the bank statement. Did you get that now?
Yes, sir.
It's just a model. It's just a model. Then on the debit side, here you have what you call uncredited. Uncredited what? Uncredited checks. This is where you locate them. Then the unpresented checks are on the credit side here. Unpresented what? Unpresented the checks. Is that clear? So where do you find the uncredited checks? The uncredited checks are found on the debit side here of the cash book. And on the credit side, you find unpresented checks. I'm showing you the locations of these because it's very important. You get this where we're going. Are you fine now with the model?
Yes, sir.
Yes, yeah, I've created this model just trying to make it easier for you to understand what we're going to be doing. Yeah. So now, that is to say, when you are updating the cash book, because the first step I told you is to update the cash book. How do you update the cash book? How do you write the cash book up to date? Number one, you begin with what is on the credit side. What is on the what is on the debit? You can still begin with what is on the debit and then record what is on the credit. Let's start with the debit side. We know that the debit side of the cash book should be equal to the credit side of the what? Of the bank statement, right?
Yes.
Yes. Yeah. So check now with the way how you're writing your cash book. This is on the debit side. So your updated cash book, will have the records of the following. Number one, you check, do we have the record on the 20th of P. Thomas 100 kwacha? It is here, right? It's a deposit in your cash book. You have it on the 20th. Then even the bank is aware, right? Is aware that there was a deposit, isn't it? There was a deposit of 100 kwacha. Yes. So this 100 is appearing this side, right? And when it comes to this Dijon, it's a deposit as well. This deposit was of 190 kwacha. Even the bank is aware of that deposit. So they indicated here. So you're finding that it means that these two records, they do what? They do agree. But see now where the problem is, there is this 70 kwacha, right? This 70 kwacha, which is a what? A direct credit. It's a direct transfer. You have got this 70 kwacha. It's there on the bank statement, but it is not there on the what? On the cash book. You are not aware of this. Okay. So when you're updating the cash book, it means you will also include this transaction on the 30th. Okay. The transaction of this on the debit side, you record this P. Smith and this 70 kwacha. There are also what you call, by the way, the transfers. Okay, the direct transfers. You transfer the money just the way how you do it, maybe on mobile money. You can send money direct to my account. I have the money, right? The bank has processed. I have received that money. But if you have not called me, maybe you haven't called me, I haven't received the message. I'm using Airtel money or mobile money things so that you bring it like here nearer to where we are. You have sent some money to me. I haven't received the message. There are those times when you just receive the money, but you haven't received the message. The message has not reached to me, and you have not called me to tell me that, Basa, I've sent the money. You haven't told me. So what will happen is that the bank is aware that they have sent the money to me. So me, I'll have a debit entry. My account will be having that money on the, which is the bank account. I'll be receiving that money. There is that money. But I haven't recorded in the cash book, because in the cash book, I just record what I'm aware of. Okay. I'm aware that I've received. So like this one, we have just moved the money directly. Maybe this person has not yet called to tell you that I paid. Okay. But when you have a bank statement, we have this. There are such things that happen. So get to understand all that. So this is what is there. This 70, when you're updating the cash book, will also be there. Okay. You also record this, this 70 on the debit side of your cash book when you're updating your cash book. You will record these, all these transactions that you have, they will be recorded. You will also include what? You will just have to include this 70 as well, which was not what? Which was not there on the debit side. It means that you have updated the cash book on the debit side. When you got the credit side, check what is on the credit side. On the credit side, we know that the credit side of the cash book should be equal to the debit side of the bank statement, right? Should be equal to the debit side of the bank statement. Okay. So what is there is the credit side of the cash book is this one. On the credit side, you have this is 65 for Gordon J. It is also indicated here, meaning the bank is aware of this, that you gave out, meaning you gave out, probably this is a check, of course, you gave out a check, then the bank has also indicated, right? Then you also gave out a check to who? To this person, K, I don't know, 175. The bank is also aware that you have that record, right? So what will happen now is that the only record which is not there is the 50, this 50, the bank charges. See that the bank charges are there on the bank statement, but they are not there on the cash book. So when you are updating the cash book on the credit side of the cash book, you will record what? Bank charges 50 kwacha, and then you balance. You just close the cash book. Just balance up the account. Is that clear? Are we together so far? I just want us to be together so far. You will understand. Are we together? Any question? Yes, sir.
Just a minute.
Mr. Shtuka, your
Yes, I
hand is
just
up.
wanted to, yes, just wanted to find out. So you just update on already what is already written, then you just include it, or you have to rewrite everything there, or what do you do?
Okay, I will show you. There are two ways of doing it. I'll show you. There are two ways of doing it. You can just say, get the totals from here. You can total up these parts, which is the unupdated cash book. You can get the totals. Then to the totals, you add what is not there. Or you can start from what is there and include what is not there. It's still one of the way of doing it. It's still the same, one of the same thing. It gives you the same solution. Are you fine?
Thank you.
Okay. Now we move. Here is the updated cash book, just as I showed you now. This cash book has been updated. You've seen balance brought down just the way how it was, the debit side of these guys that I talked about, but we never had this guy, this transfer for P. Smith. It was added now here. Then we never had we had this Gordon and this other person, but we never had the bank charges, isn't it? You include the bank charges. Then from here, you tot up, you close the account, okay? How do we close the account? We know that is to sum up these sides, and also this side. Then the biggest amount, 610, will be written both sides, on both sides, right? Then on the smaller side, this side, which is lesser, the lesser side, you add up this amount, you subtract it from 610, it should give you the balance carried down, 320, right? 320 with the day, like that's the day of the month. Then on the other side now, the first day of the next month, you record the same amount as balance brought down. Okay, just the same way how we close the accounts. You close the account. So just that. This is the updated cash book. It has been updated. Is that fine?
Yes, it's clear, sir.
Okay. If it is clear, then we can move on.
So I wanted to ask, there's no order of starting, or you just always start with the credit side to balance up?
No, you
Or
can start from any of the two.
ways?
You can start from any, from either
Okay.
side. Okay. Here is another question now that we have.
Noted.
We have a question. The following are extracts from the cash book and the bank statements. You are required to write the cash book up to date and state the new balances as on 31st December 2018, and draw up a bank reconciliation statement as on 31st December 2019. Okay. So we need to update the cash book. After updating the cash book, then we write a bank reconciliation statement. So follow down. Just as usual, how do we update the cash book? I said that the credit side is equal to the debit side. Oh, let me use the red marker since the screen seems so. Credit side should be like this, right? We just have to identify now what is not there. Yeah. The balance brought down, let me start with we can start with the credit side if you want. Analyzing. We have got 642 from this guy. We also have 642 here, right? We have 21. We have 21, right? Are we following?
Yes, we are.
642.
Maybe I should draw like this. This debit side with this one. This credit side with this one. Yeah, we know that it's the same thing that I'm talking about. So 62 on the bank statement, first 62 is also there that side. Even here it is there. Then check that 20, I said these are checks. 209 is a check, but it is not appearing on the bank statement. You have written in your cash book on the credit side, meaning you have given out a check, but the bank has not yet received that check. Those are called the unpresented checks. Like the person whom you have given that check, they haven't yet presented it to the bank. So you have unpresented check 209. It is not there on the bank statement. Okay, unpresented checks are not there on the bank statement. And then observe what else, apart from the balance carried down, of course. Check there is no what? There are no bank charges. The bank charges are on the bank statement, which means when you're updating the cash book, you record the what? The bank charges on the credit side of the cash book, the cash book that has been updated. Did you get that?
I heard you speaking of a 209. Where are you getting that, sir? Where are you getting the 209 from?
Oh, the 209 is here.
Oh,
of T. Arion.
Okay. I've seen it.
Yeah. So this check, it is there in your cash book. You have written in the cash book, but the bank is not yet aware that you've given out a check because that person you gave a check hasn't presented the check yet. So it's an unpresented check. Yeah. So when you are balancing the cash book, it simply means the only thing that you don't have on the credit side is the bank charges. So you record the bank charges on the credit side, right?
Yes, sir.
When you go to the debit side, what do we have? We have the balance brought down. The balance brought down is also there. Then what we don't have is we have 101. We also have 101, right? We have 44 and we have 44 here. What else don't we have? We don't have 319, 319 and 246. They are not here, right? They are not there on the credit side of the bank statement. So the bank statement does not have these two numbers. So these are checks, of course. These are checks. We call these as uncredited checks. They are there on your debit side of the cash book, but they're not there on the bank statement. Is that fine? We call these as uncredited checks. And then when you check again on the bank statement, there is this 93, which is a credit transfer from T. Morris. There is a credit transfer. So the bank gave out, but you have not received them. You haven't recorded in your cash book. Probably you have received this money in your bank, like the bank did there, but you as a business, you are not aware. So you haven't recorded this credit transfer from T. Morris. So when you're updating the cash book, it means you have to include this credit transfer on your debit side that you received this credit transfer. Is that fair now?
Yes, sir, it is.
Okay. So that is how you write your cash book up to date. So you are updating your cash book. That's how you are updating your cash book. So how do you write now the up-to-date cash book? The other way of doing it now, the one that Mr. who is this one, Chituka was asking about, you just get the totals for what is already there, like the totals from the debit side and the totals from the credit side, right? From this unupdated cash book, the one that is unupdated, there is this cash book which is not updated. You get, right? So you get the totals here. Do the totals. What do you get when you total up this on the credit side? Anyone to do that quickly for us? Hello. You can add
The
this.
credit side is 692.
Those three figures.
692, right?
Yes.
That is the credit side. Can you add the debit side
Yes,
as
sir.
well? You include the balance brought down. You can add the side as well. The credit side, the totals. This is for the unupdated cash book, the one that is not updated.
For the debit side, it's
129.
Sorry?
29.
4,129.
4,100 in the 4,129. Okay.
Mhm.
You've seen, eh? So you just get that total so far. You say total so far on the debit side and the total so far on the credit side. Is that? Then you start adding now what you're adding. You add this credit transfer on the debit side that I talked about, that 93. The bank charges this side. And then you close again the account, right? How do you close the account? You are aware we add and then record the biggest amount on both sides, right? Then on the lesser side, you sum this and subtract it from this 422 so that you can get the balance carried down as 3483. Yeah, 3,483 as the balance carried down. This same one will be the balance brought down. We know that this will be a balance brought down 1st January of the next year, which is 2020. Are we fine with the way how we update the cash book? Or alternatively now, alternatively, you can just get these sites. The totals, like you start recording everything which is here, right? Everything. Then you just add what you are adding. You're adding, was it a credit transfer? You add this on the debit side, this 93 here. And you also, where on the credit side, there you do this up to here. Don't add the balance carried down. Just include the bank charges here. Bank what? The bank charges, you write the amount here. And then you sum, you close the account again. You still find the same things. Did you get that? Hello.
Yes.
On the debit side, you said you write everything down. Yes.
Yeah, you can still write everything the way how it appears, everything up to 80, up to 30, this person. Then you will add this credit transfer, this what is not there now. That's what you include. You just include that. Then from there, you add sum up and close the account, right? Even on the credit side, you record this, what is there, everything that is there. Then you just add what is not there, which are bank charges in this case. You add the bank charges. Then you sum there, you close the account, sum both sides, you look for the big amount. Yeah, you record the big amount both on the debit side and on the credit side, isn't it? Then then you come up with a balance carried down. Did you get that?
Yes, sir.
Okay.
Then all the time they should balance. When it doesn't balance, it's a wrong answer, not so.
Am I getting the question? Like, this side, yeah, like you are closing the account.
Yes, sir.
Yeah, when you're closing the account,
Yes,
it will always balance because you write first the biggest amount on both sides. then the difference, this amount which is making them not balance, you record it as the balance carried down. So it will make it balance when you sum now. So this is the balance which is there. It's the amount which is making it not balance. All right.
Sure, sir. Clear,
Now
sir.
that we have the cash book, I think we are now aware on how to update the cash book. Let me show you how we draw up the bank reconciliation statement. How do we draw up the bank reconciliation statement? Observe this, pay attention. There are two ways of drawing the bank reconciliation statement. Let me begin with the first one. The first one is where you start with the balance per cash book. And this is the updated cash book, of course, not just any other cash book. The balance per updated cash book is what? 348. This balance carried down. You know that this same balance carried down will be the balance brought down, right? That would be the balance brought down. We know that the balance carried down will be equal to the balance brought down, isn't it? Yeah. So what is there is this same amount here, this balance in figure is what you are recording as the balance per cash book, the balance brought down. So once you start with that, with the balance per cash book, then you have to add the unpresented checks. I think you know the unpresented checks, where we find them, isn't it? Where do we find the unpresented check? On the credit side of the cash book, right? Unpresented checks, I said they are found on the credit side of the, they're found on the credit side of the cash book.
On the
credit side of the cash book, we find this what? This unpresented check, 209 from Arion. So that's the unpresented check. Then the uncredited checks are found on the debit side of the cash book. We have them here. We talked about this 319 and the 240, and the 319 and 246. These are uncredited checks. Okay, that's what he said. Like, these are the checks you received, you wrote, but you haven't just received the amount. Okay. So what will be there is that if you follow this format, where you start with the balance per cash book, then you will add the unpresented what? Checks. When you are done adding the unpresented checks, you are going to less the bankings not yet on the bank statement. Those are called uncredited checks. They're still called uncredited checks. Okay, so you less uncredited checks. And for uncredited checks, we have these 319 and 240, 246, just as I showed you. The sum is this one. This is what you are lessing. When you less that from that amount, you have the balance per bank statement. That is what you are going to close with. The balance per bank statement. Observe now, listen. The balance per bank statement is 3127. 3127. The balance per bank statement. So we are going to go to our bank statement and check. We have 3127. Nice. Let's go to our bank statement. The balance per bank statement. What is our balance? This is our balance, isn't it?
3,100.
Yeah, so you've seen it is starring, right? So that you don't lie when you say the balance per bank statement. Like, it has to agree with what is, what you have done. It has to agree now with what has been indicated at the bank now. So by so doing, it means you have reconciled the differences between the cash book and the bank statement. I've reconciled those differences. All right. The other way of doing it, this is just the format, okay? It's just a fixed format, it's fixed. Then you can still do the bank statement by starting with the balance the bank statement, right? When you start with the balance the bank statement, you start with that balance of the bank statement, the ending balance of the bank statement. Then it means you will add uncredited checks. Have you seen now the difference which is there? Here you are adding unpresented checks. Now here you will add to the balance the bank statement, you add the uncredited checks. Uncredited checks. You're going to, to add the uncredited checks. And then what are you going to less now? You will less unpresented checks. You less unpresented checks. Then what you will close with is the balance per cash book. Have you seen? The balance per updated cash book, of course. The balance per updated cash book. And observe, let's see if this amount is equal to the balance per updated cash book. You've seen it is equal to the balance per updated cash book. Where is it? It's here. Have you seen that this is your updated cash book? And what you have closed with now, like balance per updated cash book, is the balance per updated cash book. Yeah. I don't know if you're getting what I'm saying. Hello.
Maybe
Hello?
come again, sir. Maybe
Okay.
we are trying to take notes of what you're saying, so maybe you come back again. Sorry for that.
Okay. I'm saying, if you decide to start with the balance the bank statement, you will record the balance the bank statement, right? That ending balance on the bank statement, you just get it like that. The balance brought down on the balance carried down on the bank statement, that closing balance. Then you will add the uncredited checks. These bankings are not yet on the bank statements. They are uncredited checks. Uncredited checks. See the difference now? When you start with the balance of the bank statement, you have to add the uncredited what? Checks. Then you are going to subtract the unpresented checks. If you subtract the unpresented checks, what you will remain with, it is the balance per cash book. Of course, the updated cash book, not any other cash book. This is what I was saying. So observe that this balance that you have really said that it is the balance per cash book is starring with the what? It is agreeing with the balance carried down on the updated cash book. But if you decide to start with the balance per cash book, check what is happening. If you start with the balance per cash book, you have to add the unpresented what? Checks. If you start with the balance per bank statement, you add the uncredited checks, then subtract unpresented checks. But if you start with the balance per cash book, you add the unpresented checks and subtract the uncredited checks. What you will end with is the balance per bank statement. When you start with the balance per cash book, per updated cash book, of course, you end with the balance per bank statement. If you start with the balance per bank statement, you end with the balance per updated cash book. By so doing, you would have reconciled the differences. Is that fine now?
Yes.
Hello.
Sir.
Any question
Yes, we are
from
clear,
anyone?
sir.
Let's do
Hello?
further. Yes, sir.
Yes, I just want to find out on the first is it method of doing the bank reconciliation? Is there any reason or any technical explanation why we are adding those unpresented checks, since we have already issued them out to maybe a supplier, but he has not yet presented them maybe to the bank? Is there any technical reason why we are adding them again to to the bank, to the balance in the cash book.
Uncredited checks.
Okay, and anyone to attempt the question? Why do you think? That's a question coming to the class. What do you think, class? Anyone?
So just a try. It means that the bank has given us the statement, and we have seen that the checks are not appearing. So since we have already issued those checks and they have not yet, the bank has not yet presented them there, us as a company, we need to now add them because it's not appearing on the bank side.
Okay. Interesting. Any other? Any other explanation? Okay. Observe that someone wanted to say something. Okay.
I think what is important is to make sure that why we are, like the question, why we are adding the unpresented checks to visit the bank statements and all that. The reasons here is we have to track and ensure that both those unpresented checks, they are recorded, as well as the bank statements figures, they're actually tallying, because that's the gist of this bank statement. Rather, bank statements reconciliation. The gist is to make sure that you do a reconciliation and make sure that both are balancing up.
Okay. Interesting. Any other? Okay. Where do we find unpresented checks? The unpresented checks are found on the credit side, right? They are on the credit side of the cash book, not on the bank statement. Okay. Remember, what you're trying to do now is to reconcile the differences. We're reconciling the differences between the bank, what is recorded at the bank statement, and the cash book. So the unpresented checks are on the cash book. Yeah, they are on the cash book. So what is happening now is that first of all, before you can remove whatever you are removing or whatever you are subtracting when you are giving out, because these checks they are said that you gave them out, right? You gave them out. You add back everything that you had, like you add back everything that you had before you could give out. Then afterwards, you remove what you're supposed to do to remove. Okay. What is not there in your account, you remove. Remember, unpresented checks, they are in your account, right? The unpresented checks are in your account. Like who is presenting the check? It's not you. It's not you as a business. It's that person. So it means that you have issued the check, but the money is still there in your account. You're aware that this money is still in your account, right? So we are trying to add everything that is in our account first. Then we let's see what is not in our account. Then by so doing we would have reconciled the difference. I don't know if you got that, but you should be fine very soon. Did you get that?
Yes, sir, we
Hello?
did.
Yes, sir.
Yes, just to be on the clear side. So what we are saying is we are actually adding the unpresented checks because in our books, we wrote that we've removed this money.
But it is there.
So that it's still there. So when we got the bank statement, we had to put them back in our books to say this is still there.
Yes.
Then what we assumed that we've received, we found that it's not yet in the bank already. So we had to
remove
it.
that.
That's what.
Yes.
Oh, okay. Okay.
Okay,
No,
thank you.
I get it now. Yes.
Are you
I'm
fine now?
comfortable now? Yes.
Okay, thank you. I'm asking for 2 minutes. I'll be back. All right, I am back. Let's try another example again.
Welcome.
Let's try another example again, the third example. No, this should be the fourth. Then we will be fine. I think we'll be somehow fine. Yeah, the reason why I'm trying to explain in all these corners is because you can be given the multiple choice questions. The multiple choice questions require you to fully know what you're doing. Yeah, they require you to fully know what you're doing before you can choose the answer that it is A or B.
Sure.
Okay.
Sure.
On 31st December 2018, the bank column of this company's cash book showed a debit balance of this. Okay. On the monthly bank statement written up to 31st December 2018 showed a credit balance of that is on the bank statement. You have the debit side, the debit balance of the cash book and the credit side of the bank statement. Follow nicely now. On checking, the cash book with on checking the cash book with the bank statement, it was discovered that the following transactions had not been entered in the cash book. So these are the transactions that were missing in the what? In the cash book. Number one, the dividends. The dividends of 240 had been paid directly to the bank. Okay. The dividends had been directly, so it's more like he paid the dividends, paid directly to the bank. Okay. They had been directly paid to the bank. You had these dividends. By the way, first you need to be sure of the direction of these dividends. Let me ask, are they coming to the business or going out of the business? First, because you need to know the direction.
Out of business.
Out of business. All right, any other? Okay.
Paid directly, I think it means these dividends have actually been debited directly. So it's within the business.
The dividends have been paid to the what? To the business. The dividends have been paid to the business. If you are the one as the business who had given out these dividends, I'm sure you could have recorded in your cash book because you could have been aware that you are paying, right? Remember, this is not a standing order. Like when you are paying out dividends, how do you pay dividends? You know, your company, as a company, you should be aware when you're paying out dividends. I'm sure we understand the way how the dividends work when you have the shares in these corporations. When you have when the dividends are being paid out first, of course, we understand the different types of the shareholders, of those preferential shareholders and the ordinary shareholders. So take, for example, in the case of the ordinary shareholders, the first thing that the company has to do with the corporation is to gather all the money, pay all the expenses, pay all the bills, and make sure that they do whatever they're doing and meet their plans first. Then what remains is declared as profit. Then they will decide now as a business, are we going to declare a profit to our what? To our shareholders and tell them? They declare the what? The dividends, the profit. Then they say, how are we going to share now this money, okay, with our shareholders, the owners of this company? We are going to share this money according to the number of shares that you have in a given company. I'm sure you see those things listed on Lucy. Yeah, you can own shares in Zanaco. It's cheap. It's around 2.6 kwacha per share this time. Yeah. Yeah, you buy shares, then you're going to share the profit as the owners of Zanaco, like the shareholders, and according to the number of shares. So it means for the company to declare the dividends, it means that they are aware. So there is no way that the company is not aware. There is no way. So the only way, if the company is the one or it's the business that is giving out the dividends, there is no way on how a business can give out dividends without being aware. It is not possible. Did you get that?
Yes, sir.
Mm-hmm. So what will happen is that even a company can buy shares. By the way, the companies can still buy shares, like a company can buy shares in another company. It's possible. As a company, a small company or your business can decide as a business, we're going to buy shares maybe in a Copperbelt Energy Corporation, CEC, or we're going to get shares in Zambif. As a business, you buy, or maybe in Chilanga, the Chilanga Cement guys, and just like that. So as a business, you can still buy shares in other corporations because those are giant. They are called corporations. They are no longer companies. They are really, really huge. Yeah, you can still do that. So you receive dividends. Are we fine now with this one? First, before we move to the next one. So it means you received, your cash book was debited, but you didn't include that. A credit transfer, customs and excess VAT, refund of 280 had been collected by the bank. You had a credit what? You had a refund of this. So this is a debit entry, right? But it had not been entered in your cash book. So when you're updating your cash book, you should include this amount. The bank charges, you know where the bank charges go always. The bank charges, they go on the credit side of the what? Of the updated cash book, isn't it? You're giving out.
Yes, sir.
And the direct debit of 70 for the rack, the subscription had been paid by the bank. Who is paying out now? Who is giving out? Is it the business or is the bank?
It's the business.
The business is now giving out. So it means this transaction will be recorded on the credit side of the cash book when updating the cash book. A standing order of 200 kwacha for this loan repayment. Have you seen now? You are paying a loan. For example, there are those loans that you are paying like slowly. So just go to the bank. No, I'm paying a loan. I pay every month 200 kwacha. Okay. So now there was this standing order that I was talking about. They paid direct by the bank, which means it should be on the credit side, right? Standing order on the credit side, 200. We are analyzing how our check will be. And this person's deposit account balance of this was transferred into the bank current account. Okay, there was this deposit. You have this deposit. Is it a debit entry or a credit entry?
It's a
Just
credit entry.
It's a credit entry.
Okay. Let me read this again. This business deposit account balance, this amount, was transferred into his bank current account.
Oh, sorry, he's receiving this amount, sorry.
Okay, so he's receiving the what? He's receiving the amount. You're following, right? He's receiving the amount is a debit entry. And again, further, 2 checks drawn on favor of T Code and this guy, Haddock, had been entered in the cash book, but had not been presented for payment. What do you call these checks?
Unpresented checks.
Unpresented.
These are unpresented checks. So you have seen your.
Hello, sir. Hello.
Since he's logged out.
It's in the network has just tripped, I think.
Oh, okay.
Afternoon, everyone.
Yes, good afternoon.